The World Bank warns of imminent global hunger after severe droughts send food prices to a record high. This amid claims that banks are unfairly profiting from commodities trading. We ask what's actually behind the rising food prices and what can the international community do about it. This is Inside Story. Hello and welcome to the programme. I'm Teymoor Nabili. Now, a UK-based NGO has accused Barclays Bank of profiting from world hunger by betting on food crises and helping push up prices. The World Development Movement says Barclays has made more than $800 million in profits over the past 2 years from speculating in the food markets. It says investors have been using that market as a, quote, playground, and when it should be used by farmers as a place to buy and sell. All this has contributed to hunger and poverty, not only for millions in poor countries, but also in the developed nations. Well, this is the World Bank issued its global hunger warning, saying that global food prices are now at record highs. In a report released this week, the bank says its global food index increased by 10% in July alone. The price of specific commodities has risen even faster. Wheat, for instance, is 25% up. The price of maize also up by 25%, and soybeans are up by 17%. Now, the World Bank lays the blame for these price rises largely on the weather. The drought in the US has been exacerbated by a dry summer in Russia, Ukraine and in Kazakhstan. But critics say there is also a connection between the high prices and bank profits. Well, whatever the ultimate cause, all the parties agree that the burden of these higher prices will be borne mostly by the poor. The World Bank Group president, Jim Yong Kim, says, quote, when food prices rise sharply, families cope by pulling their kids out of school and eating cheaper, less nutritious food, which can have catastrophic lifelong effects on the social, physical and mental well-being of millions of young people. So what is actually behind rising food prices, and can the international community actually do anything about it? To answer those questions, I'm joined by three guests in London. Christine Haigh is a policy and campaigns officer for food speculation at the World Development Movement. That's an NGO that tackles the root causes of world poverty. In Western Connecticut, Peter Schiff is the CEO of Euro-Pacific Capital. And in Nairobi, joining us via broadband, Satchu, a financial analyst and CEO of Rich Investments. Welcome to all of you. Thank you very much indeed for being with us. Christine, let me begin with you, if I might, because your organisation has been vocal about the role of Barclays Bank in particular in this, or at least their profits recently through commodities trading. So tell us why you think Barclays Bank is in any way connected to the high food prices.
Well, first of all, it's important to say that there's now a general consensus that financial speculation on food and other commodity prices is contributing to increased volatility in those prices and has contributed to some of the price spikes we've seen in recent years. Now, Barclays is one of the main players in the commodity markets and is acting both as a sort of conduit to enable others to invest in the markets, but also acts in a way that may effectively mean the way it addresses the markets is in a sense speculating itself.
Well, let me ask Peter Schiff, do you agree with that premise that it's generally accepted that speculation in commodities markets is a determinant of food price?
No, not at all. In fact, if you took all the speculators out of the market, prices might even be higher. The real problem is not that food is becoming more expensive, it's that money is losing value. Central banks all around the world are simply printing too much money, And so you need more money to buy food. It's not the weather, it's not speculation, it is the inflation that central banks around the world are creating. And I think as long as the dollar remains the world's reserve currency and the world is committed to prop up the dollar, this is going to particularly hit hard people in emerging markets, because you've got governments all over the world in emerging markets that are printing a lot of money to buy up dollars.
All right.
And the effect of that is to raise prices for their own people, particularly for things that are the most sensitive to inflation, such as food and energy. So it's going to get a lot more expensive for the world to eat if they want to keep subsidizing the U.S. consumer.
All right, two elements there. But Christine, let me just come back to you with Peter's rebuttal of the very idea that speculation raises food prices. Just so support your theory. How are these two things connected?
I mean, first of all, I think it's fair to say that a number of expert bodies have come to this conclusion. So, for example, just last year, the UN and OECD published a report which basically said that almost all analysts agree that financial speculation is contributing to volatility in the markets. But in terms of how that actually happens, it's important to understand that the commodity futures markets act as a sort of benchmark for traders in the market for the real commodities, and they look to what's happening in the futures markets to determine their own behaviour. So if we see a lot of speculation and that drives up the price of futures contracts, traders in the real commodity markets will see what's happening.
The futures.
Go ahead, Peter.
Yeah, it's the cash market that determines the futures, not the other way around. You have to remember, there's two sides of every transaction, and a lot of farmers hedge, and
Peter,
they use the futures contract.
Let me stop you there before we get into
and without the speculators, hedging would be a lot more expensive, and it would increase the cost of farming.
Before we get into that, let me just give Ali Khan Satchu a chance at a basic level to address both those issues. Ali Khan, what of the idea that speculation affects prices, and just address also Peter's suggestion that actually what we should be talking about here is inflation?
Well, first of all, I think, the food markets have been in a perilous position for more than 5 years. We have had three major spikes in the last 5 years. One of the previous spike triggered a round of revolution all across the Middle East and Maghreb. So it is something that has happened with increasing frequency. We're seeing increasing volatility in the underlying basic food commodities that feed the world, from whether it's corn, soybeans, whatever you care to look at. And also, I think it's important, Teymoor, to note that the poorer you are, the more the inflationary impact is on your pocket. Somewhere like Kenya, the average person is spending 45% of their money on food. Somewhere in the US, you're spending 6%. So it has a magnified impact the lower you go down the pyramid.
Peter, let me just put to you one of the points that he alluded to. You're suggesting that hedging and financial market speculation is actually an evener of price mechanisms and trading activities. But the anecdotal evidence doesn't actually...
Well, actually, I think over the long run, it helps to keep prices lower by reducing the cost
all right.
of
Well,
farming.
let me finish my point. Let me finish my point because the historical record doesn't support you. Because before Goldman Sachs introduced their commodity trading funds and were quickly followed by all the other banking sector players, the commodities market was absolutely stable with very little volatility and very little price rises. Since then, during the past 15 years or so, we have seen global food prices hit record highs and go through boom and bust 3 times.
Yeah, well, what you're looking at, Goldman Sachs and other companies are simply trying to create a vehicle to help people invest in those markets. They would have invested anyway using other vehicles. It's what is driving the demand. It is the inflation. You can't close your eyes to the biggest and most unprecedented round of global inflation in world history. Governments are printing money like crazy. Interest rates are zero. All of this is to support massive deficit spending. And so the higher food prices are a tax. because governments aren't raising taxes, they're borrowing and printing all this money, the consequence is that food prices are rising. Yes, Wall Street is creating vehicles to make it easier for people to invest in commodities as an asset class, but believe me, they would be investing in it anyway, even if none of these vehicles existed. The real threat is the government, it's central banking, it's money printing, and until we stop that, we can complain about all we want, we can try to scapegoat the speculators or the weather, but that's not what the problem is.
Well, the central banks in Africa, where most of the trouble is going to arise, have not been printing that much money. Christine, do you think that the linkage that Peter is alluding to is necessarily the real point?
If Peter had let me finish my previous point, I would have explained how speculation was impacting on prices and how traders in the real markets look to the financial markets and modify their behaviour according to what goes on in the financial markets, and that's how prices are affected by speculation. But on his point about monetary policy driving prices, that may be playing part of a role, but that cannot explain the massive volatility that we've seen over the last 5 or 6 years, and it's very difficult to explain that volatility without looking at what's happening in the financial markets, and certainly the overall consensus from experts is that speculation is driving prices. And there is,
before that,
if you would just let me
if you let her finish her point this time,
and if you go back to the 1970s,
Peter, if you would let her finish her point,
if you would just let me finish, that would be very helpful. Thank you. So there is a very useful piece of research that's just been published based on a model which has been validated using predictions which have then been checked against what's happened, pointing to speculation likely to exacerbate the price spike that we're seeing the start of now. So there may be factors such as poor harvests and biofuel policies also contributing to that spike, but it's almost certain that speculation will exacerbate that spike, pushing prices higher and pushing more people into hunger and poverty.
Ali Khan Satchu, let me ask you to address this issue. I mean, Peter's point about inflation is a well-known argument and a valid question about the fiat currencies and the printing of money by central banks. But is it necessarily relevant to commodity speculation and food prices at this stage, particularly for countries where the amount of money in circulation is not necessarily a big problem?
Well, I think, it's very correct. There's a very strong correlation between the printing of funny money and the search for hard assets, which is what this money goes looking for. It goes to look for assets which will appreciate at a quicker rate than the money that they're getting, practically free. And you've seen that big moves in physical assets like gold, and agricultural commodities are just one other asset class in the search of these physical assets, which this round of money printing has created. But there are other issues which are driving prices higher. I mean, there are many more of us. We're 7 billion. We were much fewer before. We're eating much more. The amount of protein intake that the average person is eating is placing further stress on the system. I was watching Nick Clark's program where he'd gone to the Arctic. I was looking recently at Mount Kilimanjaro. I mean, you have to be completely backward not to see that we have toasted this planet. And I think the planet is a very finely balanced instrument, and we've used it. We've pushed it a little bit far, and therefore the consequences that we're seeing is like a perfect storm: funny money, climate warming, and too many of us making these demands on a finite resource. And I think we're at a tipping point. The frequency of price increases are telling me that. And so far, I don't see any solution. And these food markets are very asymmetric. It's not as if, the price will go higher, people will sell you at that price. The moment prices get too high, everybody looks at their own national interest. I mean, governments are toppled when prices get very high. No one wants to export. You get blockages in the system. And I think we're now at a point in the cycle which is really worrying. and the alarm bells are ringing very hard. You know, you're talking about 25% in 1 month in the price of corn. In Mozambique, the price of maize has gone up 118% in the last quarter. So you get these huge spikes which are amplified in all kinds of places.
Right.
And I'm really concerned that we don't have the toolkit to deal with it now.
Christine, whether or not financial speculation does affect prices to the extent that you're suggesting, there are also, as Ali was saying there, other factors involved in all of this. Are they perhaps more important? The idea that we're spending so much money on growing crops to feed to animals and to make biofuels would seem not to make a great deal of sense in a time when people don't have enough to eat, would it?
Absolutely. We need action to tackle all the drivers of food price spikes, including looking at biofuel policy, doing our best to tackle climate change, which is making extreme weather events such as droughts and floods more frequent and therefore affecting harvests. But we also need to tackle financial speculation. And the scandal is that actually these markets were, until the 1990s, were well regulated and worked effectively for the farmers and users of food and other commodities. They were actually set up to serve, and these rules need to be put back into place. Now, the US passed regulation back in 2010 to do precisely that, but the implementation of that is being obstructed by Wall Street. In Europe, what we're seeing is discussions about similarly regulating the European markets, but again, we're seeing that that legislation being watered down by financial lobbyists and by the UK government, who continues to stick to its mantra of self-regulation over proper regulation of the markets. And until this is addressed, we're going to continue to see speculation contributing to price volatility and exacerbating price spikes.
Peter, if we leave the financial speculation out of it for a second and just talk about the market mechanisms behind all of this, and the globalization and the diversification of growing patterns and the amount of power the different countries have to determine this stuff, is there an argument to be made that the market is actually distorted right now and isn't serving the people that need it most?
Well, it is distorted in that the governments are creating a lot of demand when they print money. I mean, prices are determined by supply and demand. And if people have more money, they bid up commodity prices. That's just what's going on. And yes, you could say, are there speculators who own commodities as a hedge against inflation? Sure. But we didn't have ETFs in the 1970s, and commodity prices skyrocketed. And I would argue, if you take out the big drop in 2008 associated with the financial crisis, when everything went down, not just commodities, commodity prices have been rising for 12 years. It's moving in lockstep with central bank policy. And as central banks get more desperate and print more money, which they have to do to keep interest rates from rising and to finance big government, the more they do that, the more pressure you're going to put on commodity prices. And nothing else matters. I mean, you could eliminate speculators completely. It's not going to stop this from happening. You've got to stop the presses. And as long as governments are making money less valuable, prices have to go up. And the most sensitive prices of all are food prices.
The interesting thing is, Ali Khan, that the most active presses that Peter's talking about have been in the United States, and yet in the US, food prices are in the entire world are the lowest percentage of the average spend of the average family. It's where you are in Africa, where people's major part of the people's budget goes towards purchasing food. Is the Federal Reserve stopping printing its money going to help the people where you are? And if not, what will?
I think that, where I am is a unique situation, which is sub-Saharan Africa, where typically yields are considerably below the global average yields. I think, and there's a lot of free land, which has created this enormous rush to grab land all over sub-Saharan Africa at corn rents for eternity. But, so I think when I look at Africa, we've got a number of different vectors. We can improve and make more efficient our agricultural production. We need to support smallholder farmers, because the nature of land distribution in Africa is very distributed to lots of smallholders. And I think, we are also finding we're getting the backlash of global warming, particularly in the Horn of Africa, which means that the pastoralist lifestyle in particular is suffering a great deal. I'm not pessimistic about food production in Africa. I think, it's getting the basic ABC correct, and we can do a lot better. But I think in the current situation we're in, where we remain inefficient, where we remain dependent upon food aid, just imagine the reduction in the amount of physical food that's going to be delivered in the food aid program over the next few months. It's going to be dramatic and drastic, and I think it's going to really affect people at the bottom of the pyramid in places where they've had a bad harvest. So I think Africa remains a little bit unique. But you're quite correct. Given the amount of money that the average African, a percentage of his salary has got to spend on food, the number of Africans, we're talking about 1 billion now, it's a huge number. Plus, in Africa in particular, you've got a very young population. They're become very urbanized, and I think they present the second round revolutionary risk that broke out in North Africa and in the Middle East. And that's what we've got to be very careful about, because the price spike has been dramatic. 10% in 1 month is no small potato. It's been very recent. So the shock is fully felt. And I think when it is, it's going to be dramatic.
Christine, what, in your mind, can be done to try and sort some of these problems out? I mean, clearly, sorting out droughts is not necessarily within our gift, but are there steps that can and should be taken?
Yeah, I mean, certainly the World Development Movement would like to see more and joined up international action to tackle climate change, which would help to reduce the number of droughts and other extreme weather events we see in future. But also there are some very simple steps that can be taken right now, and one of those is re-regulating the commodity markets, which were deregulated in the 1990s and early in 2000 and urgently need to be re-regulated with limits, not to completely ban speculation, but to prevent the enormous amounts of money rushing in and out of these markets and distorting prices and exacerbating the price spikes as we've seen in the last few years.
Ali Khan, let's just talk about this inflation question for just a second, because, the predictions of the collapse of the dollar, predictions about roaring inflation because of central bank printing presses. We've been hearing this for 15 years now, and we haven't seen anything apart from record low interest rates in Japan, record low interest rates in Europe, no sign of inflation at all in financial assets in any sense. There's a lot of speculation in commodities. So what really is going on here?
Well, clearly there is a very clear correlation between the increase in the printing of money and the value of particularly commodity assets. If you look at gold, gold has risen for 11 years in a row, and I think that's a direct consequence of Fed money printing, as people have sought a safe haven for their money, something that will keep the value and not be devalued. And you've seen that also in the commodity markets. The oil price for years could never get above $40. Then after the Iraq war has surged to twice that and has remained elevated. Food prices, the same trend is happening. But inflation at the consumer level has not happened because we've had this massive deleveraging of Western personal balance sheets, and that's kept the inflation number under pressure.
But the thing I don't get, and let me put this to you, Peter, if it is in that Friedman-esque construction, too much money chasing too few goods, why has the focus been on so few goods? Why is this excess cash that's flowing around the world only targeting commodities? Because the bond markets and the equity markets are the traditional.
But you say that there's no sign of inflation. Well, you say that there's no sign of inflation. I would say that surging commodity prices are a flashing neon sign of inflation. But inflation is by definition an increase in the money supply. That is what we have. Now, the effects of inflation are rising prices, but they don't all rise at the same time.
Ali Khan, let me put that same question to you that I put to Peter. If that is the case, then, if what we're seeing here is too much money chasing too few goods, then why is it that the money's all chasing commodities? Why aren't we seeing asset price inflation elsewhere?
Because if you look at the quality of global assets, they continue to deteriorate as a total asset class. So people are searching for a safe haven in this sort of storm of volatility. And it's very difficult. That's why and they're constantly being constricted. At one point, it was the Swiss franc. At another, it's been gold for 11 years. It's been food. It's now becoming food commodities. So there are fewer and fewer options, which means the nature of the markets, we're like a herd. We all pile into the same thing. And I think you've had fewer and fewer things to pile in, just as you note. And that's what's created these very, very big spikes in certain assets and not in others. I mean, if you look at bond markets, I mean, it's been practically a war field. You know, people have lost so much money in places like Greece.
All right, thanks for that. But one very final quick question to Christine as well before we run out of time. Christine, if it is as Ali Khan has just described, then we really don't have any hope, do we? Because all the money is in very few hands. They seem to know what they want to do with it. And the people who are suffering aren't having much of a say.
I think it's important to realise that actually this is precisely why we need re-regulation of these markets. We need limits to stop huge amounts of money being poured into these markets, into what is effectively a bet. None of this money is actually being invested in improving food production. This is simply a bet on prices, and we need regulation that will stop money being used for such unproductive purposes and instead being channeled into real investment that's so badly needed in economies around the world.
There we will have to leave it. Thanks very much.
And that's why we're calling for regulation.
Thanks very much indeed. Christine Haigh in London, in Western Connecticut, Peter Schiff, and in Nairobi via broadband, Ali Khan Satchu. Thank you all for talking to us today, and thank you very much for watching us on this edition of Inside Story. And if you want to send us some feedback, our email is insidestory@aljazeera.net. I'm Teymoor Nabili. Thanks for watching. Goodbye for now.